Welcome to the special show, Women and Wealth. It is March 8th, International Women's Day, a day to celebrate just how far we have come in terms of women and rights, and also look ahead at how we can improve in the future. It's a day when women are further recognized for achievements and their contribution to developing and improving the world that we live in. Here.
That's right, and there's actually plenty of things to be happy about as well. I mean, it can't pass without giving a huge thanks to the women that helped make that happen. On this note, let's quickly welcome in our few guests who have made their mark on the markets. Let's welcome our panel of experts. Nandita Parkar, Managing Director, Karma Capital. Anu Jain, Partner, Product Solutions, IIFL Investment Managers. Shaina Mukaddam is right here with us at the studio, market expert, as well as we have Jyoti Vasvani as well, who's CIO, Future Generali India Life Insurance as well. So overall, yes, it's a day to celebrate, Fatima, in terms of where Women's Day go.
Yeah, it is. But, you know, I think one of the greatest things about this day is that we actually managed to also curate a lot of the women that one speaks to every day. But it's a great chance for all of us to really have a chat together. And given the fact that this is a channel that talks about markets programming every day, this is also a chance for us to really look at the larger trends and perhaps any insights you have as people who have been navigating these markets for such a long time. So one of the questions, in fact, I'm going to start with you, Shaina, is that, you know, both of you, of course, have been people who've seen various cycles of investment and how the economy has been moving so far. How would you sort of characterize the current environment, given the kind of track record you've seen, the kind of history you've also navigated when it comes to being an investor? What are you looking at? What are we looking at right now? How would you describe it?
See, the sentiment as of now is, it's negative. But as you've mentioned, I've seen a lot of markets ups and downs, okay? So I see this as a temporary phase.
Yeah.
I see this as a phase that will, say, play out in the next 1 month, 2 months, 3 months. There are a lot of factors, domestic as well as global, as well as valuations. So all these things put together, I cannot just go out and say, oh, everything is gung-ho, go out and buy right away, right? But all I can say is keep buying at depths, because we are here to stay, and these and the correction that we are seeing and we're likely to see at worst is going to be much lower than what we've witnessed, say, in 2008 and earlier. So I see this as an opportunity to buy. I would say have your list ready, look at good stocks that are now available at decent valuations, and invest for the medium to longer term, because this is the best, you know, I think this is one place where you make maximum returns compared to any other asset class.
Sure.
Right.
So it's a buy.
So it's a buy in terms of, Fatima, any woman who's looking to probably start looking at markets.
Don't be scared about what's happening.
Exactly. And probably this is the time, probably lower valuations as well for you, where someone could enter. But Jyoti, everything said and done, yes. How do you think, you know, a woman usually perceives this kind of a thing? Because the risk appetite, as always it said, is slightly lower in a woman when it comes to markets as compared to a man. Whereas in your daily life, I think a woman's risk appetite is way higher than a man.
Right.
How does it differ? So, I mean, why is it so inverse, number one? And how do you think, you know, how does a woman then react like that?
I think it's a little bit to do with stereotypes. A woman is a little less confident about finances, because I think the way we are brought up is the man of the house takes care of the finances and the woman is a homemaker. I think that's a stereotype which needs to change, and I think it is changing rapidly. And one of the reasons that women get a little more worried about, you know, this kind of volatility in the stock markets would be to do with that kind of a stereotype. And you're absolutely right. You know, women are good risk takers, they're good risk managers, and with that kind of, they have a very balanced approach to life, I would say, right? So it's about taking a holistic view about things. It's about, you know, having a more, you know, weighing the pros and cons much better. So that's a quality which a woman has, and that really helps. That's an asset in the finance line, actually. Unfortunately, just a perception and just a stereotype, which I think it's now getting much better.
And I think that's a reflection of what Shaina was talking about, and that was the reason I asked you this at the top of the show. How are you looking at this whole thing? Because that whole concept of a holistic view and perhaps a less knee-jerk sort of reaction, so to speak. I know I'm stereotyping once again, but I just feel that perhaps it's inherent. Let's talk about that whole concept of idle cash. It has changed over generations. Let's talk about, you know, even on a personal level, my mother, the way she perceived security was all about idle cash lying around, right? And of course, then there was jewelry, and then there was a famous locker and all of that. What is that whole concept? Jyoti, how would you sort of talk about that today? The idea of cash How are we looking at it these days? Cash lying around.
So cash is obviously the least preferred asset class because that's something which is not earning you. So that's something, I don't think that is something which people look at these days as much. With the advent of liquid mutual funds, with the advent of various options which you have to keep even short-term money, depending that whether you need the money immediately in an emergency. So typically you kept cash in those days, like our parents, those days you didn't have the liquid mutual funds and they had to keep cash for emergencies and stuff like that. I think that has changed dramatically. Today you can withdraw money in a day and without any problems. So that I think concept is completely changed, and I don't think people prefer to keep idle cash. Jewelry I think still continues to be an attraction for women, and I think that's something which you cannot wish away, but that's more from a fashion perspective. It's not more from an investment perspective anymore, having seen the gold cycle over the years, and I think that perception is now fast changing. And with the gold sovereign bonds, etc., coming into play, if you want to invest in gold, you have other ways of doing it rather than the aesthetic part of it. So therefore I think people are shifting from physical savings to financial savings, and we have seen a huge swing in the last few years, and that's really making a difference.
So just to stay on that point of liquidity, Shaina, as Jyoti was telling us, there are other sort of alternatives that have really come in and become very popular in the markets when it comes to liquidity. What are some of the trends that you've seen? From the days of idle cash lying around and jewelry being an investment, now we're looking at an environment where you have other investment vehicles, even if they are safer, and of course jewelry is becoming more of an aesthetic sort of purchase. What are your thoughts on that?
I absolutely agree with it, because if you've invested in, let's say, jewelry or even large diamonds or something like that, you've just enjoyed wearing it. But if you compare the returns vis-a-vis the asset equities, they have underperformed and they are very illiquid. So as Jyoti was mentioning, if you need liquidity plus you want an appreciation of your investments, I think there are a couple of asset classes, like you have investments in mutual funds. If one is not totally aware of what is happening and you're not confident of direct investment, but also you have your direct investment in equity, that both these asset classes outperform the returns you get from investment in gold, jewelry, as we've seen in the last couple of years. And even if you take real estate as an asset, I think while there are some pockets which have performed, I would say, in line with equity markets over past couple of years, but these are very small pockets. It's not a very holistic type of investment in real estate, plus it is very illiquid and it requires a huge commitment of capital.
Amount also
Absolutely.
Is really huge in that.
So for an investor, a smaller investor, it is I think this equities offer a good investment class, and I think as Jyoti mentioned, cash is really not a preferred asset because it's a zero return.
Correct. Yeah. But Shaina, staying with this as well, when a person is new in terms of investing in equities, the major perception that they have is that equity means fast money. It's never been taken as that, okay, no, there is a gestation period, there is a holding period that also comes with it, because people have never understood, people who are new investors, that no, you have to look at all aspects when it comes to investing in equities. How do you think that could change, and do you think that trend is also changing now, wherein, and this is not only from a women's perspective, even if it's a new man or a boy who's looking to invest in markets, the immediate idea is it's fast money, and that's the reason we want to invest. Do you think that perception is also changing now?
Well, I think yes, as more and more people will witness the ups and downs of the market, as equity is becoming a more discussed class. I think when I started my career, there was no information available on stocks, on equities. You really had to do a lot of hard work, research to figure out, what is happening. So it was like a black box. But today, I think with a lot of media and with people like you discussing, talking to a lot of managements, discussing companies, discussing markets, I think the information dissemination has become pretty good. So anybody, that's key. Right. So anybody is looking at it, I think, is looking at equity as a class, and I think mutual funds is a preferred space if you're uncomfortable with direct investment. And I think even mutual funds have given a very good return over the last couple of years. So I think women, men, whoever, young people, investors, new investors, definitely it is a good place to mutual funds.
I'm going to ask you to hold on to that thought because we have another guest who's joining us on the show. Anu Jain, who's partner, Product Solutions, IIFL Investment Managers, is here with us. Anu, a very good morning to you. Thank you very much for being a part of this conversation. We've just been chatting about how trends are perhaps changing, what is sort of happening there when it comes to more female participation in these markets, as well as the determining factors. Shaina was just sort of touching upon the fact that when she had first started investing, information was not really as rampant as we have now. Give me a sense as to how you think investors, and I guess especially female investors, should be digesting knowledge when it comes, well, we seem to have lost her for a second. We're going to get Anu right back in a moment. But Jyoti, I'm going to bring that to you. How should investors, and I've obviously, this is a show that is also geared towards bringing in more women into the markets, be digesting their news, their knowledge? Because knowledge is, of course, very important when it comes to these markets or however they want to go about their financial portfolios.
See, all said and done, it is a it's a professional's job. Okay,
Yes.
so trying to guesswork yourself, everybody does not have that amount of time to give and understand and imbibe the knowledge and interpret and analyze the way it should be.
And that's key.
And that's key.
Yeah.
So just going by hearsay on what is being talked about may not be the right way to take a decision as far as investments is concerned. So unless you have you're able to give that kind of time and devote so much of time and energy to then you can do direct investments. But otherwise it would be best left to the experts who are full-time at it and go through either the mutual funds or the insurance companies to invest. That would be a much better route to select. And while you need to be aware of what's happening in the market and what kind of asset classes you need to kind of be in, so that of course you need to have some professional help there. But I think it's better to go with professional experts because it requires a lot of effort, a lot of time, a lot of analytical skills to imbibe that knowledge and kind of take it forward.
Right. So when you're saying that yes, a professional is something that you need to guide all of this, Shaina, I'll come to you on this. If as a new investor, if someone needs to start investing, there are a couple of sectors which are highly volatile. Some sectors where yes, that even if you invest slowly, steadily, the money is not going to go anywhere. Anything that you have in mind that as a new investor, probably these are sectors as an investor that one should be looking at, which could be safer bets, where the risk appetite need not be that high as well.
Yeah, see, I think typically the stocks that fall into that category will be stocks that are expensive.
Right.
Today, have been in the past and will remain in the future. But these are the stocks like, for example, FMCG, large companies. You have very well-known brands that have been used 20 years back and will continue being used 20 years later, right? And these companies are very well managed professional companies. So I think if there is a new investor who wants to directly invest, should look at a long-term look at a 5-year to 10-year period. That is where the most money is made, safest money is made. You invest in good quality companies, good managements that have been in existence for the last 10 years, have delivered, are showing good cash flows. I mean, if you have the time to direct invest, you've got to look at the balance sheet, right? So if you have got companies like that which don't require much investment in capital, plus who are doing pretty well, good brands, invest in them. To give you examples of expensive companies which have been today, ITC, HUL, then you have some of the tech companies which are going through a very bad phase but which have created a space for themselves. So if I was to try to do sector allocation today, right, I would also add some large tech companies which are going through a bad phase. So you pick up some companies like maybe an Infosys, NIT Tech, which with the valuations are slightly lower, the companies are going through a bad phase, but the opportunity is there and they will survive, so I think these are the type of investments, just to give you a few examples.
So very quickly, because I'm curious about this, I remember in the days when certain telecom stocks were just, they were gold, so to speak. I was having this discussion with one of my elder sisters. There was a time when a certain company seemed to sort of rule the roost. That stock was where it was at. Then, of course, here we are. We've seen a massive disruption in telecom. What is the kind of advice you have there? Because, going by the mantra that we were talking about, large established companies had a track record. We could see a massive demographic dividend that was going to pay out when it came to telecom, for example. Then you see a huge disruption like data and everything else that's happening. What is your advice to, say, a person who had that stock and they're just crying at the moment, right? So how do you deal with that when it happens? You're sort of investing in a solid company. There's a huge disruption in the sector. What happens then?
See, if anybody is invested in something like a Bharti, okay, let's leave Reliance aside, you've lost your money. And in any portfolio, there are going to be at least 20-30% stocks which are going to really underperform and make you lose money. But there have to be other stocks which have given you 10 times, you know, which have more than compensated. So let us assume you've invested in a Bharti 15 years back, or when the whole thing started, right? You've made phenomenal amount of money. So it's not that you've lost money. Even in fact, Idea, okay, while it is doing so badly today, if I have invested, I personally have investment in Idea, so I can say, and I've been a very sad investor in the last 2 years with Idea, right? But at the same time, I'm still making money. So it's not that, you know, it's still below my, it's still above my cost price. So if you're a long-term investor, yes, but also, you know, there is a difference between telecom companies and between FMCG companies. Correct. And this is where the cash flow is important. So one sector like FMCG has a very low cash investment requirement for capital investment, while telecom is the other end of the spectrum. So if one was a long-term investor and one had to pick between the two sectors, I would say FMCG has given a better return, and I would still be with an FMCG stock, which as of now is more expensive vis-a-vis the telecom stocks. But if you're a long-term investor and you don't want to trade the ups and downs of the market, then be with the safer sector.
Right, so you have to be with the safer sectors as well. But stay with us. We have Nandita Parker, Managing Director at Karma Capital, as well as Anu Jain, Partner Product Solutions, IFL Investment Managers, also joining us. Happy Women's Day to everyone. But Nandita, I'll come to you first. We've just been talking in terms of how the risk appetite is with women versus the way it is with men. Secondly, you know, in terms of sectors which could be safe havens for new investors, maybe not only women, but even, you know, from the men's side, which could be safe havens. If you could just help us understand, for you as well, the journey has been for almost 15 to 20 years that you've been in the industry. How have demographics changed? How has life changed, you know, from the time you started to now?
Sorry, I couldn't hear you. You're asking during the 25 years that I've been in the industry?
That's right.
Yeah. Please go ahead.
My question to you is, Nandita, as to how have demographics changed? You've been in the industry for 25 years also, as you mentioned. How have demographics changed in terms of the way a woman's thinking in terms of investments, the way knowledge sharing is concerned, and the way growth goes? Because probably at some point in time, we've always seen that an investment decision always lied with a man at some point in time. Now things are changing, wherein people are turning to women in terms of our investment decisions go. And in fact, there are reports and, you know, research reports suggesting that fund managers, wherein the funds which are taken care by a woman, are giving higher returns than funds which are taken care by men as well. What do you have to say on it?
Okay, so there's a whole bunch of questions there. So, I mean, I think that the statistics, at least what we have from the US, are proving quite strongly that women are better money managers than men. So that's number one. We don't have that kind of data here in India because we have a very few number of women in the asset management industry. And, you know, you have here the survival of the fittest concept playing out, which is that only those who have struggled and worked really hard and were determined to get a seat at the table, and then at the head of the table are, you know, the pool of women that you're looking at, comparing them with the average male investor. So it's kind of skewed here where women are concerned. But I think that, you know, the most important thing, the lesson is that women in India must take charge of their personal finances, and that's sort of the very basics of it. Whether you want to get into the industry, you know, it's sort of a natural, I think, for a lot of women who are good at math and number crunching to want to do that. And it's an industry where I think over time meritocracy will play out. more than in other areas, other than the traditional ones, of course, in terms of the healthcare industry and education. So I think the financial services industry has a lot to offer women. I think that women tend to be better risk takers than men. My own experience has been, of course, taking a lot of risks where it comes to personal risks in terms of my career. So actually, when I started the fund in Karma Capital in 2004, in my presentation, I had one slide which said, this is an India dedicated fund, and I'm doing this to boldly go where no man has gone before. Because at that time, this was the first India dedicated fund to be launched offshore. And it was funny, and but it was clearly a risk that I was taking with my career. And I think that kind of risk women will have to take. I encourage young women to do that. So I hope that answers your question.
Absolutely, and in fact, the way you built the funds is much spoken about, including your love for math and, of course, the head of numbers that you have.
Risk appetite's increasing.
Risk appetite's increasing. Anu Jain, bringing you back into the conversation. Thank you for waiting by patiently. We've covered a few parts of this whole conversation, but what I want to ask you is, what do you think are the most important factors that are determining investments and how those are changing when it comes to, especially female investors? I mean, there are different factors that are playing out here: life expectancy, risk appetite, how they're actually looking at taxation as well. Anu, what do you have to say in terms of the driving factors that are dominating those investment decisions when it comes to these portfolios?
I'm sorry, I can't hear you.
I'm going to repeat my question, wondering if you can hear me. What are the driving factors you feel are dominating investment decisions? I've mentioned some such as life expectancy, taxation, inflation. What are some of those key concerns when you feel investors are approaching you? And especially, I guess, if there's a difference perhaps in the way female investors are looking at these factors.
Well, I mean, if you're looking at investment as an opportunity for anybody, obviously, yeah. Hello?
Yeah, go on, Anu. We can hear you.
Hello? Yeah, go on, Anu. We can hear you. Okay, I mean, so you're basically looking at what are the reasons and what are the... Okay, bad technology day, but overall, basically, obviously, the first thing we look at is that what exactly is your time span of investment and what is your return expectations. Given that, the macros, the micros, the external situation, the currency, I think it's a mix of so many factors. But overall, I think the first thing we look for is safety of capital and a reasonable return. And I think over the years, with experience, the market talks to you, and that's basically how, using research, using the macros, that's how we decide how and when to invest for people and where.
Okay, so Anu is giving us a sense as to how they navigate that territory. Nandita, I just want to come back to you because you were touching upon the kind of climate that existed when you were first, coming in with the India-based fund, as well as how, I guess you were looking at unloved stocks at that stage. Just a little bit more in terms of you yourself as a person and your journey as an investor and someone who actually has this whole universe around you. What was your first investment yourself? What was your first concept of money and making money? Can you tell us about that experience?
Okay, so the first concept of money was how do I enhance my pocket money? It was really important for me to go out and build a career for myself. And coming from the kind of background I did, which is a very sheltered, protected, typical Indian family, it was a fight to get out and do this. And I think that what we have today, just coming back to today, is our generation has created kind of runway for young ladies to come in and build their careers, just like the women's movement of the past 100 years did for me. And that's really the message that I would like to leave for Women's Day. I'm sorry, I'm not able to hear you a lot, but that's really the most important thing is to build on what we've built. And in terms of investment decisions, if you're not in the business, then just leave it to the professionals, because that's what we do day in and day out. I always say this, the market is an extension of myself. And that's from years of being in it. And I think that I feel very strongly that we should be supporting young women to come into our industry and encourage them. And in terms of getting support, get it from your family members, get it from the people who love you. And that's really the message that I'd like to leave.
Right. So basically, women empowering women is something that everyone actually needs to touch base on as well. But Anu, coming to you as well, being with markets for these many years, do you think that stock picking is something that women are now excelling at and ruling the roost as well over there? And if yes, I mean, do you think a differential over years as to, yes, the number of women working with you, number of women investing in the markets, the trends are changing, and they have been making right investment decisions as well?
The audio is bad, so I'm assuming you're asking me if women excel at these decision making for the markets.
That's right.
Well, I think men and women are equally poised. Where we get the skill sets as women to the table is the fact that you are a little more emotional in the decision making. So you consider some more things than probably a male would in an investment decision. You'd probably be a little more risk averse than a man, is what I've usually noticed. I mean, this is my taking away from being 20 years into the market, that probably the two things where women bring in a little extra than a man is probably the factor that how you can read the markets a little better with your intuition and emotion, and probably you're a little more risk averse. So I think over the period, if you can, using this skill set, add even 100 basis points a year to the return, I think that would be phenomenal. So I think that is where we score over men.
Great inputs there. Jyoti, just coming to you, just bringing this back into an investment conversation. Shaina was talking about this at the beginning of the show. Cyclical trends, looking at perhaps valuations where we're at the moment, and opportunities. Just to break it down in terms of sectors, when it comes to a short-term investor right now who's perhaps going into the markets with a higher risk appetite, recommendations you have there, and also I guess those first-time investors who are going in, and we're here characterizing, especially perhaps female investors who have a lower capital amount to put in. What are some of the sectors and the kind of companies that you think they should be looking at?
So if you look at it, last year we had, the whole macros which were favorable for us. It was largely a macro theme and a multiple expansion which happened in the market, and you saw a phenomenal return last year. This year, the baton has passed from macro to micro, so to speak. And it'll be the earnings growth which will actually determine how the stock markets move. This year is going to be a year of volatility. Yeah. It's going to be a year of more earnings specific movement and not of multiple expansion to the extent we saw last year. Mm-hmm. So I think the first thing is to not have the similar expectations from the market as we had last year. Excellent. This year would be much lower returns than last year. Sure. Last year there was a synchronized global rally which happened, and India was part of it. Correct. This year there is a global synchronized volatility that is happening, and again we are part of it. We have a larger share of volatility because of certain domestic issues that we are facing, but we are part of a global cycle. Also, we have monetary policies which are tightening across the globe, and that's going to have an impact on the markets as well. So from a short-term perspective, this year the return expectations need to be more much lower than what it was last year. Having said that, that's just a one-year view, right? we've seen over the years, equity as an asset class outperforms, and typically these are years when it's the time to actually invest, right? That's the time when you actually get into the markets, and that's when you make the big money. Because if you invested last year, you probably wouldn't have, kind of made that much of money. But now when the markets are correcting, that's the time when you actually start entering the market. And not to say that you go and invest at, everything at one go. Of course, you need to kind of be more prudent in how you're investing, and go invest, probably on a monthly basis or on a quarterly basis, so that you're actually doing kind of a systematic investment into the markets. But clearly this market is, the macros are improving for India, in the sense that, the micros are improving for India, but we will have probably the very good GDP growth numbers this year, because our nominal GDP growth is expected to grow around 11 to 12%.
Yeah.
And the corporate earnings was around 4% of GDP last year. If that goes to 6% or 7% or 8%, clearly the GDP growth numbers will look much higher, and that will get money into India. Right, so that is something which we should take cognizance of, that India could outperform going forward for the next 5 years if the macro story continues. Despite the small deterioration in the, the macroeconomic indicators, we still have a good fiscal deficit. We still have a good current account deficit. We still have, a decent inflation. We haven't reached 8-9% inflation that we have. So we are at 5%, and it's likely to remain in that range. The only surprise could be crude, which is now stable. Okay, so crude, which was a tailwind last year, could be a headwind this year.
So are we saying that yes, macros are improving, there is a good growth story, but probably there could be slightly lower returns this year, but your macros remain pretty strong.
That's right.
Shaina, what do you have to say on it? I mean, do you think that the growth story is pretty much intact right now? And yes, we have multiple levers in place where someone could see substantial growth coming in over the next 2 to 3 years.
Yeah, taking forward what Jyoti was saying about the economy looking better in terms of overall growth over the next 1-2 years, and India seems to be overtaking China in terms of growth numbers. So I think it is going to be a good time to get into the market. Definitely one needs to keep your percentage asset classes in place as to what percentage you're allocating to equity, what percentage to debt, what percentage to say real estate. So I think there are different asset classes, so don't put 100% of your money in pure equity, but yes, it definitely has got to be a asset class that you hold, because that is where you're going to outperform the overall inflation over the medium to longer term. So I think you've got to balance your portfolio.
Keep your balanced portfolio. Yeah. Well, it's been a pleasure having all these voices on our show, and really very interesting for us to be able to really look at the markets as they are, as well as, I guess, the flavor they can take, and perhaps it can also be something that's more curated towards the kind of demands that certain female investors have. Thank you so much. I just want to thank our guests right there. We had Nandita Parker, Anu Jain, of course, Shaina, who's right here, as well as Jyoti. Thank you for that. And with that, it is, of course, a wrap on this edition of Women and Wealth.
In fact, we will track the pre-open trade in markets on the other side. Please stay tuned.